Hi, this is Matt with Vault Insurance and Investments and Cornerstone Financial Services. Today I'm going to do a quick video on 5 common misconceptions about employer-sponsored plans. Number 1, I have less than 5 employees, so my business is too small for a group plan. This is not the case. You have to have what's called a common law employee. Common law employee means you're in a well, first of all, you need to be a corporation, so either an LLC or incorporated. And then you need to pay yourself a W-2 wage. So if you do that as the owner of the company, then some carriers interpret that law as you being a common law employee, and they'll do a group of 1. Some carriers do interpret that a little bit differently, but work with a broker and they'll help you find a carrier where you can do a group of 1. Next, I must offer coverage to all my employees. This is not correct. You have to offer it to all your full-time employees. Now, obviously, if someone's working 40 hours a week, they're a full-time employee. But let's say you say to work to be full-time in a company, you have to work 35 hours, and you're working 34 hours. Well, now you're not a full-time employee. So you do have to offer it to all full-time employees, and of course that does not mean they have to accept it, because they may have other coverage via other means. Next one, I must pay all the costs associated with the coverage I offer my employees. This is not correct either. As the employer, you do have to cover 50% of the employee's cost. Now, you do not have to pay anything for dependents or the spouses. Obviously, you get one bill in the mail, though, for the whole policy. You pay that whole bill, and then you can take the dependent cost or the employee's dependent's cost out of their paychecks. Next one, it is the same cost and coverage if I get an individual plan through the exchange. This is not correct. I mean, first year of the Affordable Care Act or even second, I could see where you make that point. But the individual market just has changed so much that I would not agree with that now. So for example, if you wanted to be on a PPO right now, preferred provider network, the old school plan where you go anywhere you want to go, 90% utilization, as far as the doctors accepting the plan, you cannot buy that in the individual market in my area, right now. The only way to get a plan like that would be to do a group plan. Next, the rate increases are crazy on group plans. I would not agree with that as of recent. Years ago, yes, there were some pretty good rate increases. The rate increases generally that you see in the media as being 30%, 40% rate increases. That's talking about the individual market. Think of it like this. If you're an individual and you are unable to work because of your health concerns and you're getting, you're receiving a lot of expensive care, you're not going to be on a group plan because you're not going to be working. You're going to be in the individual market. So just the way that works, the individual market is set up to have, in my opinion, some high claim activity. So just to recap, you may be able to do a group of 1 as a small employer. You must offer coverage to full-time employees, and you must pay half of the employee's cost. Group plans may offer better coverage and network options. Rate increases on group plans that may be more stable, and that has been, my experience. Thank you for watching the channel. We will keep you updated with any other updates with the Affordable Care Act and changes that we see in the political environment. I'll put some links below and our contact information. If you have any questions, reach out to us. But thanks for watching and have a great week.